Welcome, traders, to Enduring Resolve, where we talk about achieving financial independence through trading. I'm your host, Luis, and this is episode 2, where we talk about why financial independence through trading. So, in our last episode, we talked about the difference between trading and investing. In this episode, we're going to talk about why would you choose to be a trader and achieve financial independence this way. So, today we're going to talk about why choose financial independence through trading, who should choose this path, and really for that I'm going to more talk about why I chose this path. Right? I don't know all the listeners that are out there, but it's can't speak to you individually, obviously. But then I'll share the benefits and challenges of trading. And through all this, it's going to be very anecdotal. I'll share some general concepts, but obviously I'll more share what my personal take on the benefits, challenges, and why I came this way. Okay. So, as far as what constitutes financial independence as a definition, we're going to define that as anytime your assets generate more revenue than your expenses. Right? That sounds pretty complicated. What does that mean? So, the things you own should be generating you money. That's what makes it an asset. So, when that revenue becomes more than what you have to pay to live, then now you're financially independent. So you can achieve that in a multitude of different ways. You can do that by owning businesses. Those businesses in turn have cash flow and free cash flow that you can use to pay yourself a salary, eventually hiring a manager to run the business, and then removing yourself from the business. And now you have passive income, financial independence that way. You can achieve it also by way of saving and investing, just what we talked about in our last episode. But that will obviously take you several decades to achieve. Not that owning a business won't either. All these take time. And another great example is real estate. That's the easy one. You buy rental properties, you rent them out. They pay you rent. Hopefully your rent, well, not hopefully. Hopefully, you know that this is what's supposed to be happening, but that rent is more than enough to not just cover the mortgage, but also cover any repairs and maintenance on that property and still have some left over. And when that sum accumulates and you can live off that residual, you're financially independent. So that's what I define financial independence as. I'll say several people do. But now for my personal journey, I'll tell you that I have actually owned multiple businesses. Like if you've heard episode 00, you've heard me say, I wanted to be a Marine ever since I was 8 years old. I've wanted to be a business owner since I was 12. So I've known that this is the path I wanted to go. I wanted to have something that was kicking off money and I could retire myself. So in my early 20s, it was as radical as owning 900 numbers. For those of you that remember 900 numbers, and for some of you younger guys and girls, 900 numbers were these numbers. The most lascivious were the ones that were adult entertainment. I didn't own any of those, but you could have just about any business where people would call in for advice or information, and you would be charged by the minute, or the caller would be charged by the minute for calling that 900 number. So I had one of those. I went absolutely nowhere with it. Didn't understand marketing, but that was one of my first few businesses. And then as I ventured into my late 20s and my mid 30s, I got really hot and heavy with real estate investing. So I was a big real estate investor. I was a landlord, owned properties. I rented them out. Eventually, 2008 happened. Even though I had equity in my properties, the damage that was done was so severe that I had to get out of the business at a loss. Hurt a lot, but kept going. I picked myself up and I became a wholesaler. Some refer to it as assignments. That's when I find a property with a motivated seller, place it under contract, and then sell my rights via the contract to another buyer. So that's wholesaling. Usually these are the professionals that are between a seller and a rehabber. It's become quite popular in the last several years. I had very success with it. Didn't very much like that very much. Eventually got my real estate license. So I was a licensed realtor for a couple years, eventually venturing into commercial real estate. So I was a commercial real estate broker ever so briefly. At the end of the day, it spent only a couple of months there. It was not conducive to family life as far as how how rare, I should say, the payments are in the commercial real estate world. Even if you're doing everything right, just a commercial real estate deal takes a long time to close. But those were my experiences, just building businesses and investing in real estate. And what I learned through all of that is, you have to find a way that's unique to you. And that's really the big message in this podcast is you can't achieve financial independence in any which way you want. But it has to be how you're made. It has to speak to you. I could have become financially independent with any of those methods that I just talked about, but they weren't me. They didn't adhere to my personality, my values, my work ethic. As an example, in wholesaling, I'm trying to find motivated sellers. A lot of these people were people that were in dire straits. They were at risk of losing their properties, losing their homes, and I was buying their properties for a song. That didn't always make me feel good. It was some people, it was, a divorce or something like that, where they just wanted to get rid of the property. That I didn't feel as bad about. That was just business. But when it's somebody that is a good, hardworking person, and they lost their jobs or they've gotten injured. I remember one of those calls, and one of my deals was someone had gotten hurt and wasn't able to work for several months, and they were just trying to unload the property, move down to Florida. I eventually wasn't able to help that person, but as those stories kind of racked up, I was like, I don't like dealing with these stories. I didn't feel like I was helping them. I felt like I was taking advantage of their situation. So, and then for the realtor and the commercial real estate broker, we'll get into why, as I'm made up, but I am definitely not wired to be in sales, meaning I don't have that go personality to always be calling people. I am by makeup fiercely independent and introverted. My Myers-Briggs, if you know what that is, a personality test. I'm an INTJ, very introverted, like to keep to myself. As a kid, I didn't play team sports. I was a boxer. I did martial arts. I did anything that was very much just keeping to yourself. I remember the first day I walked into my boxing gym, my boxing coach, he always gave everybody the same speech. He'd sit you down and he'd go, look, this is boxing. It's not like football. It's not like baseball. Here, you're going to win or concede on your own merit. If you're in a fight and you can't keep going and we have to throw in the towel, that's it. You're done. It's not like football or any of those other team sports where you get hurt, you go ride the bench, and the team keeps playing. And if the team wins, the championship, then you're a champion with them. That's not how boxing works. And I remember that resounded with me. I was like, yes, this is where I belong. This is my sport. And I did that through my high school years. So very independent, very much like to keep to myself. I can spend long bouts of times alone. I prefer it over being with groups. And it's not that I'm antisocial. Not at all. I just really just recharge when I'm alone. And I'd say, as much as I say that I'm an introvert, I've heard this term and I've taken to it, which is I'm an ambivert. I don't know if that's a real thing, but really what it means is I'm somewhere between an extrovert and an introvert, meaning that I do have that social skill. I do go out and be in public. I can interact with people and, not give off, mountain man syndrome or anything like that. But when after a certain period of time, it's time for me to remove myself and just kind of go spend some time alone, kind of reflect on the day, reflect on myself. I like to pursue things that are mentally challenging and, require minimal human interaction, which is a lot of what I'm saying. So every time I've done a lot of these personal assessments, it's always came back with me, these are the ones you do when you're in high school, like what should you be when you grow up? And a lot of mine were photographer. That came up a lot. which is funny because that's my father's big amateur thing. He's a huge amateur photographer. I grew up with that in my life, so I could have gone that way, but I didn't see it as a lucrative career. I didn't see myself building the life that I wanted for myself through photography. I still may keep it as a hobby, but if once the training is to the point, maybe I do become a professional photographer. Maybe that is my calling. I just need the financial security to be able to do that. Now, why I love trading is when you take all those characteristics and all those traits together, it shows, and in trading you succeed or fail pretty much as an individual. There's no team aspect to it at all. You are there alone placing your orders, and you alone are going to profit, or you alone are going to lose money. It demands a lot of self-control. Trading demands that you follow the plan that you set out for yourself. It demands that you continuously seek self-growth and new learning opportunities. It punishes rule breakers. So if you don't follow your trade plan, what's going to happen, which is you're going to lose money. And it demands that you continue to do research and determine, if the strategies that you're using are still viable, which means that you have to spend long bouts alone in front of a computer screen trying to figure out what works and what doesn't. And all those things were perfect for me. Like that I can do that. I can do that. Now, it's interesting because trading prior to 2000 was absolutely not a viable career choice for me. I grew up in New York City. I remember going down to Wall Street. My father used to deliver packages down there. And I remember spending some time with him down there. And I can tell you that I would not have survived in a pit at all. So that there was this revolution in technology that, unfortunately for those that were in the pit, they lost their careers, but it opened up an opportunity for others to engage in the same type of business activity by way of computer. So, now we're trading via computer. That's perfect. Now it became a viable choice for me. And the way I see all this continue to go is the future of trading is going to go into the algorithmic trading route, which it's already here, because something like 70% of trades are done by a computer without human interaction. So that's a big deal right now. And what the beauty of that now and today is that the individual trader can launch their trading desk, an algorithmic trading desk. You could write your own algorithms now if you know how to obviously code, and become an algorithmic trader. You don't have to be one of these large hedge funds or companies in order to have algorithms trading for you, which is great news for me because I am an unapologetic math geek. I love machine learning, and I love the makeup of what the current state and the future state of trading is. I mean, this is the right time, right place, right everything for me to kind of delve into this kind of career path, if you will. So, like I said, it's just a good time to be in trading, especially if you're introverted and like getting into computer type trading. So the benefits of trading, again, is the whole being independent, so long as you don't get lonely. So there's a difference between being alone and being lonely. So I can be alone. I can get lonely just like anyone else out there, but that's not the goal. I mean, we're not trying to be lonely. If you get lonely trading, then you probably need to find something else, because that's not what I'm talking about. It's with that, it means it can also be done completely on your own terms. It's very easy to get into trading. That's also that cuts both ways. So it's easy to get into trading. There's very little barrier to entry, which unfortunately means that if you're not ready to be a trader and you enter the world of trading, it's not good. 95% of traders blow up their accounts in the first year, and I credit that to just the barrier to entry being so low. But if you do the work ahead of time and you stay on top of it, keep learning, keep committing yourself to the craft, then it's actually a benefit that it is so easy to get into trading. There's different capital. Now, when I say it's easy to get into trading, there's different capital requirements depending on the market you trade. So how easy it is to become a trader really depends what market you're looking at. Now, on the low end, you're talking about $2,000, $2,000 to $5,000, depending on which brokerage you go with, to be a futures trader. You can get started with a Forex account for a couple of $100. Stock trading, really, you should have about $25,000 so you can be past the intraday trading rule that the SEC puts out. All that said, those are the bare minimums. I definitely don't recommend or trade at those levels. But it's not like other businesses that require tens of thousands of dollars or hundreds of thousands of dollars just to get started. It's easily scalable. So if you want to make more money, you just have to buy more stuff, or take a larger position size is the actual trader phrase to say that. So if you wanted to double your money in futures, you just have to double the number of contracts that you're trading at any given moment. Now that also means you lose twice as much, but if you've got a winning strategy, it means you're winning twice as much, provided you have the capital for that, which isn't very significant, especially considering, let's say, if you owned a grocery store and you wanted to double your profit, it would take a significant amount of capital in order to do that. Not so with trading. It probably could take you maybe a couple $100 more or just a few $1,000s more, just so that you could clear the margin requirements. And that would be really your barrier to not scaling as quickly as you'd like. Trading can be done 24 hours a day. So for that, we're obviously not talking stocks, because stocks are open from 9:30 to 4:15 Eastern Standard Time. That's the only that and options. Both those are open only during those hours. However, futures and Forex are open 23 hours a day. 23 hours. So I said 24 hours, but it's really 23 hours because it shuts down from 5 p.m. to 6 p.m. But that means you can trade pretty much any time. So even if you have a job, you can find one of those off hours to go and do your trades. It can be done passively, so you don't have to be in front of the computer to trade. That would be something more like swing trading, but that is a possibility with trading. And the best part in all of this is there's really no limit to how much money you can make with trading. It's not a capped. You earn as much as your skill allows you. I mean, I've made $1,200 in less than 10 minutes several times, which is my daily goal. So that's the other benefit of it is you don't have to work an 8-hour day. Like, you do not have to stay in front of the computer all 8 hours. If you have a financial goal to meet and you meet it, it can be done in minutes to just a couple hours, and you're done for the rest of the day. So now the challenges, oh man, I kind of gave you a couple of them as we were going there. Like I said, it does require skill. It does require commitment for you to grow as a trader. It's completely intolerant of people who just don't heed that and just jump in the markets, don't know what they're doing, don't understand what margin is, don't understand what a trade plan is and how to build one and how to adhere to one and why it's so critical to do so. That is easily get destroyed. Now, just like I said, you can make a lot of money trading. You can also lose a lot of money trading. Like I said, 95% of people blow up in their account in the first year. And something like of those that remain, I think an equal percentage are gone by their second year. I can tell you that personally, I've lost $3,000 in a day. That was not following my rules, and that's what I'm saying about not following your own trade plan can be just catastrophic to your trading account. But I've had $1,000 days where I've lost, but the most I've lost so far in a day has been $3,000, which is, it's significant. I mean, that was 10% of my trading account just gone in one day. So that takes an emotional toll. You need to be able to have the emotional maturity, the psychological maturity to be able to sustain events like those. And truthfully, I should have never lost those $3,000 because, had I followed my trade plan, I wouldn't have been in a position to have lost those. I wouldn't have taken those trades. And even on top of that, you don't just magically arrive at $3,000 lost. There was a point there where I was $500 down. There was a point there where I was $700 down. There was a point there where I was $1,000 down. There was a point there where I was $2,000 down, and I did nothing about it. And that's why I walked away with a $3,000 loss. So on me and on you to know, hey, there are days when you're not having a good day, or hey, you're not following your trade plan. Now's the time to stop and not trade that day. So that is one of the biggest challenges in trading, is just adhering to your emotional and psychological requirements of knowing when to trade and to adhere to your trade plan. And you heard me say that, you can trade 24 hours a day. There's a catch to that. And that is, even though you can trade at any time, the best times to trade are when there's high volume in the markets, because that allows you to get good pricing in, good pricing out. You have price movement, and it's where your safety can kind of come from. So that said, really, there's 3 great hours to trade during the day, which is during the American Open. That's that 9:30 open till about noon. That's the best time to trade. And I'm talking, really anything. There's futures and options and stocks. That's when they're really moving. If you can't trade the U.S. Open, the alternative would be to trade during the London Open, which is the next high volume time. Depending on the time of year, with the whole moving the clocks forward and back, that's usually about 3 a.m. or 4 a.m. in the morning. That's Eastern time. So make the adjustment there to your time zone. But that usually means you have to be up that early to trade the London Open. An alternative to that would be to trade the Asian Open. And that is typically around 9:30 at night Eastern time. Again, make the adjustments for your local time zone. But that is a very low volume market. So it's you could sit around and see price not move very much. It's considered a higher risk to be trading during that time. That said, I have made my daily goal, which is $1,000, trading the Asian market. But I've also lost, money. I haven't lost the 3,000 I lost that I mentioned previously. I lost that during the regular American hours, but I have lost, considerable money at trading the evening markets. And I've got colleagues that completely stay away from it just because of how low volume it is. And when you start getting yourself more into trading, you'll see when you have a very low volume market, price just jumps and moves very violently as it's trying to fill orders. So it's not a great time to trade. So even though I said 23 hours, it's and you can do it any time. Depending on your strategy, you may not be able to do it at any time. Now, if you have a swing strategy, that doesn't really matter. You do it when you do it. You put your orders in because you're waiting on price to hit your entry price and for price to hit your exit price. You're not in front of the computer trying to actually be an intraday trader. If you're trying to be an intraday trader, time matters. And we'll have an episode on different strategies and how to choose a strategy to address kind of all those concerns there. But so again, how do you decide if trading's for you? Okay, so questions you should ask yourself is, do you have an affinity for finance? If you don't have an affinity for finance, if you don't like the markets, I guess that kind of answers itself, right? This is not something you should do. Now, you should have an interest in learning the markets. Do you like learning about the markets? And I'm not talking about the stuff that makes it to television and those 24-hour news shows. That's not what I'm talking about. It's the type of stuff that you'd probably find on a Series 6 or a Series 7 examination. For those that don't know, those are the FINRA licenses that you get in order to be a financial advisor, a financial salesman, to sell financial products, be that mutual funds, stocks, futures, forwards, options. Those are the types of where those guys get that education from. Is they sit and take those tests for a Series 6 or a Series 7. Now, I don't recommend, unless that's the route you want to go, that you go so far as getting the licenses. It's actually pretty challenging because you have to be sponsored. You can't just go sit for these examinations. But I do recommend that you at least get yourself a study book and just look through the material and go, okay, do I want to learn about options? Do I want to learn about stocks? Do I want to learn about futures? And just get that education. You know, if that it doesn't seem appealing to you, then again, maybe not the way for you to go. Another question you can ask yourself is, are you a natural analyst? Like, do you like analyzing anything? I mean, not necessarily the markets, but do you like going deep into analysis? If you don't, yeah, it's maybe something you should think about. There's a lot of, I do a lot of trade analysis, not the trades themselves, but more statistical analysis as to how I'm performing, what my win percentage is, what my expectancy is. All these terms will eventually get covered later in a future podcast and future videos. But that's another big question, is you have to be able to look at yourself and go, how am I doing and how can I be doing better? If that's not something that's very natural for you or that you don't want to develop, probably not come into trading. And the big one is, are you willing to dedicate the next 3 to 5 years to get, moderately good at something? I mean, not even necessarily replacing your income, but just getting a good handle as to what it is that you need to be doing and get yourself profitable, because it is going to take time. I've been doing this since 2016. I went live in 2018 and was live through 2019. Right now, as I'm recording this, I'm on a little bit of a hiatus. I'm actually going to go back to trading in March of 2020, but that was just more realigning my finances, and I'll get into a podcast on that as to what caused the pause and how I started moving money around and kind of re-establishing goals. So obviously, the other couple of things you need to think about with that is, just like I said, I had to kind of restructure and get my goals in place. Is you have to have that strong desire to take command of your financial future. If you don't want to do this on a regular basis, then that's your cue that you need a financial advisor. Okay, and then all the more big ones is, do you want to live life on your own terms? That's obviously like a big thing that most people would obviously say yes to, but when you're looking at doing things like this on your own, it'll become apparent to you how committed you are to living life on your own terms. And the big one for me is you're building wealth without employees, and without tenants. So if all those things, if you answered yes to most of them, I'd say go ahead and start taking a look at trading as your path to becoming financially independent. How to do that? Go ahead and start studying. Look at those Series 6, Series 7s examinations. Subscribe to our website to keep abreast of everything that I'm putting out here. I'll start talking about my favorite finance books here, meaning books for trading, and that's where you should start. Just start getting into books. If you can go into the CMT and just get that curriculum. This podcast is not sponsored by the CMT. That's the Chartered Market Technicians. You can get that curriculum and start learning about trading. A lot of great books out there, and we'll start covering them in this podcast. And with that said, our next episode, what we'll start delving into is just trading with a job. This is like a big one. Is how do you trade when you have a 9 to 5? So next episode, that's going to be what we're going to tackle. I'll give you my experiences and how I approach it and how I deal with that. But if you want to keep posted again, go to our website, subscribe, www.enduringresolve.com. That'll keep you posted on everything that we're pushing out, all the content, be that a podcast, video, or any content that we're pushing out on our YouTube channel. If you want and you can, go ahead and subscribe to YouTube channel is Enduring Resolve. But at the website is the easiest way to do that, because you'll see our Twitter feed, also Enduring Resolve, at Enduring Resolve. You'll see anything that comes over from YouTube, and you'll see any of these podcast episodes come on. And be sure to subscribe on your favorite podcast listening app. So that's all for now. Thank you so much for tuning in. Really appreciate your support. And if you want me to cover any topics, please reach out to me. Best way is via Twitter. Just go to @EnduringResolve. Look me up. Share a post. Send me a message. Again, this is Luis, your faithful host. And until next time, keep it green.